We've just had an election in British Columbia, and Christy Clarke of the Liberals has won, much to the surprise of most people in British Columbia, and I think probably even to Christy Clarke. At the start of the election, the pundits indicated that the Liberals were behind by about 20 points in the polls, and as it turned out, they actually won very comfortably. And so Christy Clarke will be governing the province for another 4 years. The main plank in her platform, and she was very good at keeping on message, was that she wanted to balance the budget, keep taxes and revenues in line. And so she's going to be under quite a bit of pressure to achieve that. I suspect that the projections made in the budget that came down just a month or two before the election showed that there would be a balanced budget, but I suspect that there were optimistic estimates made in terms of what the revenues would be and what costs would be. And so that I suspect that it will be somewhat difficult for Christy Clarke to come into the balanced budget. If she looks at raising income, I think it's going to be problematic. I think if she does that the revenues in fact will not flow. For instance, let me just give you some examples. If she were to go after some of the sin taxes, liquor being an obvious one, if she increased the rates for alcohol, I suspect that many people in BC would end up buying their alcohol in Alberta. Many people in BC have come from Saskatchewan or Alberta, or they make a trip back to visit relatives, or perhaps to go to a football game or to ski. And with the difference in booze prices between the two jurisdictions, people can go and almost get a free trip if they buy their year's supply of alcohol in Alberta and bring it back to British Columbia. And so if they increase liquor prices more than they already are, I suspect that more and more people would do that. And in fact, that the revenue that one might expect from an increase in liquor rates might not materialize. The same thing to a lesser extent is the case with cigarettes. People normally can't buy a year's supply of cigarettes because they'd go stale. But if there's a significant difference in the price of cigarettes, again, you will see people arranging little businesses where they go to Alberta and buy cigarettes and bring them back for resale here in BC. How much of that occurs, I'm really not sure. But I suspect that if cigarette rates went up more than they already are, that you would see more and more of that happening. Income tax is another another issue. The province that you pay income tax to is determined by your residency on December 31st of the year in question. And many people, in fact, I know of two people myself who are consultants, and they live on Vancouver Island, but they do consulting work in Fort McMurray. And if the income tax rates get significantly different, if they're lower in Alberta, some people can arrange to make sure that their home is in Alberta at the time on December 31st. And so these kind of things will happen if you see a big discrepancy in income tax rates. And so the revenue that you might expect to get by raising rates may in fact not materialize. So I think one has to be careful. The same thing is true with corporate income tax. It's probably not likely that you'll see many companies actually move out of downtown Vancouver, going back to Calgary or Edmonton. But new ones that get started, if the corporate rates are lower in Alberta, and if personal income tax rates are lower in Alberta, the executives of these companies will consider going to Alberta rather than to Vancouver or somewhere else in BC. So there is a limit to the rates that one can charge for those organizations or companies that have an opportunity to move. Now, what can be done to raise rates? I think one of the problems is we have a lot of slippage. A lot of people are going down to the U.S. to they fill up their car with gas. They buy a lot of their dairy products and other items in the U.S. And so we are losing a lot of business. So the companies that are in the business of selling those products are losing business, and therefore they pay less taxes. And I think one way to reduce the cross-border shopping is to work with the government of Canada to say, look, we have a problem. Too many people are shopping in the U.S. and too many people are flying out of U.S. airports, like in BC. The obvious ones are Bellingham and Seattle. And what we should be doing, and the reason they're flying out of those other places is that we have an unfair competition. In Canada, the airports have to cover all of their costs. There's no subsidy from the government of Canada to cover the airport costs. In the U.S., the government of the United States pays some of the cost of the airports, and therefore they're able to have a lower rate than they can in Canada. So one way to change that is to institute a fee for Canadians coming back to Canada. Let's say a $20 per head fee for anybody returning to Canada. And that pretty much would eliminate the fact that people would go down to the U.S. to fill their car up with gas and to purchase a few supplies. So that would stop a lot of the cross-border shopping. Also, if the revenue that the government of Canada received by that fee was put back into the airports to reduce the costs, to put them on an equal footing with U.S. airports, then you would see a lot more Canadians flying out of YVR or Vancouver rather than going down to Bellingham and to Seattle. And so the businesses would benefit by that, and they would make, this would all go to the bottom line. This is all extra sales. And so corporate income taxes would increase on the Canadian side. And I think that would be a significant way to turn this problem of cross-border shopping around. The politics of it are not all that great because people like to be able to go to the States and buy cheaper gas. If we could lower the rates, the cost of flying out of Vancouver, that would be good. But it's hard for people to make that comparison in terms of what the rates are. So, but they do know what their gasoline costs are on each side of the border. So it's not a great one politically, but I think it would be a sensible move. It would ensure that Air Canada and WestJet would do much better, and so profits would be up for them. And I think it's something that would be good to do. So these are things which Christy Clarke could do there, but most of the tax increases that I've mentioned, I don't think are feasible. Just to repeat them, there's the cigarette tax, the liquor tax. Those would be counterproductive. And I think if they raise corporate taxes or even personal income taxes, that would be counterproductive. Because people can declare their residency as of December 31st, and if they do any work at all in Alberta, they would choose to pay their income tax in Alberta if the rates were lower. So the big area is to balance the budget is to cut programs. And I'll have a video on that a bit later to go through some of the things that can be done on that side. But I don't think there's a lot of room for raising revenues on the tax side. And so Christy Clarke, I think, is going to have to put most of our effort into cutting costs. And I'll have another video to to explain how that might be done.